Crown Castle stock, ticker symbol CCI. This stock is down 16% year to date, underperforming the SP500 big time. But as of lately, the stock is really getting some momentum. On the 18th of October, CCI reported earnings with FFO being in line with expectations, but they slightly missed on revenue. And people love CCI stock because of multiple reasons, one of them being the dividend, and I understand why with dividend yield at 5.4%. So could this be the perfect time to buy CCI stock? I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Crown Castle do? Crown Castle International owns and leases cell towers in the United States. It also owns more than 85 route miles of fiber. It leases space on its towers to wireless service providers, which install equipment on the towers to support their wireless networks. The company's fiber is primarily leased by wireless service providers to set up small cell network infrastructure, and by the enterprises for their internal connection needs. The company has a very concentrated customer base with more than 70% of its revenue coming from the big three US mobile carriers. Crown Castle operates as a real estate investment trust. And when we dive in the most recent earnings report, we see that site rental revenue was reported at 1.57 billion, up 1% year over year. However, both the EBITDA and the AFFO are down respectively 3 and 5% year over year. Especially the AFFO worries me a bit, since this is one of the most important numbers with REITs. In here we see the outlook for the full year of 2023 and 2024. CCI expects to deliver a 4% revenue growth year over year in 2023. But in 2024 they expect a decrease of 2%. Again, both the EBITDA and AFFO are expected to decrease a significant amount in 2024. In here we see that the WALT, short for weighted average remaining lease term, is at 6 years, which is a bit too short in my opinion. I prefer at least 10 years to be honest. We also see that CCI owns more than 40,000 towers and 115,000 small cells. On top of that, they own 85 miles of fiber. Dividend is something we will cover later in this video. And now that we know a little bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Crown Castle is a 50 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at 15. Indicating they might be at their fair valuation. Later in this video I will show you my 3 price targets for CCI stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 7 billion and in this graph we see that revenue went up in the long run. To me this looks pretty steady and consistent. However, most recently revenue started to come down a bit. We see that margins are going up in the long run, which is a great thing. However, most recently margins are coming down a little bit, so keep an eye on that number. EPS is showing similar trends as the margin and the revenue. For a REIT it looks pretty decent. Analysis expect 2024 and 2025 to be a tough year in terms of EPS. After that they expect EPS to return to mid-single digit growth. For the revenue it is looking a bit more interesting, with almost no growth between now and 2026. From 2027 on, analysis expect to see mid-single digit growth again. Return on assets is sitting at 3.4%, which is a decent number for a REIT. Return on equity is looking really good, and the most important number, return on invested capital, is sitting at 5.8%, which is a decent number for a REIT. And the good part here, it is slightly higher than the 5-year average. Current ratio is at 0.44, which is a low number for a REIT. Nothing special to mention here. Historically, it looks pretty steady to me. Right now, Crown Castle has almost 29 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. CCI has 117 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. To be honest, this could be a potential red flag to me. So, it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends, and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. To me, this looks good. It has to be said that the growth wasn't really steady and consistent always. Shares outstanding are increasing, which is very common for a REIT since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 5.4%, which is a great number. Annual payout is at $6.26 and payout ratio is at 84%, which is above the 75% average for REITs. The 5-year growth rate is at almost 8%, which is a decent number. On top of that, CCI increased the dividends for 9 years in a row. In here we see the dividend growth since 2014. Crown Castle likes to increase the dividends at mid to high single digit growth numbers every year. To me, this looks pretty decent. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to stay at current levels. Overall, these dividends look pretty interesting to me in terms of current yields, but how about the historical returns? I decided to compare CCI stock with the overall market. In this case, the S&P 500. Next to that, I added American Tower. On the 5-year chart, we see that CCI stock returned 33% including dividends, massively underperforming the S&P 500 sitting at 108%. AMT is sitting at 53%, also underperforming the S&P 500. On the 1-year chart, it looks pretty interesting with Crown Castle returning minus 10%, versus the S&P 500 returning 26%. AMT did manage to get a positive return, but only sitting at 5%. On the 6-month chart, it is AMT having the highest return. CCI is again sitting at the bottom of this list with 7% return. On the 1-month chart, it is surprisingly CCI that is having the highest return with 7.35%. The S&P 500 has the lowest return. So bottom line, Crown Castle underperformed the S&P 500 on the 5-year chart, but most recently it is getting some momentum. So could this be the perfect time to buy CCI stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 1, 3 and 5%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm filling in 20, 22 and 24%. And for the free cash flow margin, I'm putting in 22, 24 and 26%. For the PE ratio and price to free cash flow, I'm putting in 20, 21 and 22. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety. Right now, Crown Castle is at $116. I hit analyze, and we see a lot of red numbers. And since this is a REIT, I'm only focusing on the discounted cash flow value. We have a low price target of $37, which is way below the current stock price. We have a mid price target of almost $48, and we have a high price target of almost $62. To me, the mid to high price target is the most justified here, indicating that this stock is massively overvalued. My final conclusion on this stock that it has great potential. Don't get me wrong, it could be a potential multi-bagger investment in the long run. However, current valuation seems to be off. The current outlook for the upcoming years doesn't look any good, and the current debt levels also don't look that great. From a dividend point of view, things look way better in terms of yield, but the current payout ratio seems to be too high. For now, I'm skipping this stock, but I'm keeping an eye on the stock for the coming year. Maybe when the business improves or the stock price drops even more, it might be a great investment. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertainment purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.